Hey traders, I've been putting this video off for a while, but I've been wanting to do it. Really distill down the methods that I use for successful trading. And no matter how long you've been doing it, you still have the capacity to make mistakes. And it helps a lot, especially in my case, to come back and remind yourself about what you should be doing. And so I'm putting it out there for you and also as a side thing to remind me about what makes a good trade. What the main premise of this first video and hopefully a series of different methods is simplicity. I want to break down the very fundamental basic components of my study of price action that I came to after years and years of trying different indicators. Now, when most traders start out, they're going to start out with their charts looking something like this. They have indicators, pretty much every indicator that you can imagine on the chart, and different drawings, Fibonacci's. You've probably read them, seen them. I'm not going to knock any one in particular, but don't put them all at once. Otherwise, you look like this guy. And this guy's pretty talented, but I don't think a first-time person's going to be able to get much out of this. When I think about good trading, when I think about mastery of trading, I think about trying to play one instrument, or rather, one indicator or method, as it were, with mastery. In other words, you learn it, you practice it until you become extremely proficient. It becomes second nature. You can use it effortlessly. And even then, you still mess up. But the point is, you've dedicated your mind to this one concept, and that's how you can actually move forward. So in this video, I'm going to demonstrate using TradingView how and why I do support resistances as I do. And I'll start by showing why I don't use diagonal lines. And it's not to knock people that do it. I'm sure there's people out there that do it very successfully. Me, myself, I don't prefer it. And here's why. This is what I've learned over the years. So let's just say that we assume this is an ascending channel. In other words, we're going to say that if we can break below these rising lows, that's going to be a short signal for us to go short and put on a short trade. So we're going to wait until, price breaks below it there. And let's say that we were to take a short and maybe we look to play it down to the low and go forward. Well, sometimes that can work, but oftentimes we get stopped out and it's not actually a breakdown. And then what a lot of traders will do if they're drawing these wedges or coming in late is they'll say, okay, well, let me adjust things. Okay, well, it looks like here is the actual channel. And so that works for a while, and maybe we take another short here trying to play it, but now that doesn't work either. And so that becomes a problem when you're using these diagonal lines like so. Me, I prefer to use simple horizontal lines. And so that's going to be just highs and lows, very simply highs and lows. And I'll look at a few more examples later about that. So how do I look for support and resistance? Well, the foundation of my strategy after many years of trying different methods is to keep things very simple. And by simple, I mean looking for highs and lows to match and create horizontal levels of support and resistance. And for that, I'm just going to use horizontal lines. What I'm going to look for is places where price is respecting a level. In other words, it responds to that level. And that's going to be around major highs and lows. So let's just look at this range on the SPY back in September, for instance. So right around here, if we look at it, we can see where price begins to sort of hesitate and come off that level. In fact, where I stopped the playback is where it's at once again. And again, price is not making any big moves to try to break it. It's really hesitating to get above that level. That's what I mean by respect. And you can see this when you train your brain to look for price to start to slow down or speed up when it's coming to or away from these levels. And that comes with practice. And you'll see it after you look at enough charts. But it's really important. This is why I've taken off all the indicators to keep things very simple to show this level. And I'm going to keep going slow so that people can really follow along and learn. So another level we want to look at here in this range is, of course, the major low. So let's mark that off right there. And don't worry about being too exact about where you put it. Don't look at the high and low and feel that you need to get it down to the penny, because price is never going to be an exact science. You really just want to be very nimble. You want to imagine this flowing like water, and you're going to find where price seems to get to and hold. Okay, so don't be too exact about it. Just draw these as guidelines. And what that's going to help you do is establish a range, as well as use these for potential entries and targets. So let's see what happens as we go forward on this chart. So we held that resistance, and we are coming off of that. And so if we had decided to go short up here, we'd be in a pretty good position. And one thing we could probably do is look to use that lower level as a potential target. And so if we did, we would have had a pretty good trade. But it's not over yet, because we got to this support level, but it broke below it. Now, what we could do is we could take a breakout. A breakout is where we're looking for price to break a major support or resistance, and we're just going to jump in. And people can do this because, they don't want to miss the move. But let's just see what happens here. So it came down, hesitated, but look what it did. Price came back to this exact same level that we looked at earlier, that we were looking for it to break. It came back, and now we have an opportunity, perhaps, to take a pullback trade instead. And notice when we do that, we lower our risk and increase our reward. So instead of making $1 after risking one, we can make $3, 3 times our money for risking just one. It's fantastic. And that comes from being patient and knowing where these levels are. And so if we keep on going and see nice little gap there down, and that's all off of that support, and it turned into a resistance for us. Fantastic. So now that we've established that, let's just continue forward and see what happens. Well, price once again has created a low for us down here. So let's mark that off. So that's our new support. And notice we've got two separate ranges. We've got the range down here and the range up here. And we've got levels to go off of. Now, some people may want to draw minor levels here and here. Let's keep it very simple. Try to look for the major points of inflections. In other words, it's very clear back up here that price was respecting it. It's very clear here that price reversed off it very hard. And here, well, it's yet to be seen, but it looks like it's doing a pretty good reversal. And it is. So let's see what happens when we come back up to this resistance right here. Let's see if we get an opportunity to possibly go short. And yes, we probably could have gone short again at that level. Now, is he going to respect it? Who knows? You don't know when you put the trade on, but you've got something to go on. You also know where, if you do take it short, where's going to be your target? Well, there's going to be your target again. And so now we're having very well established ranges to trade off of. So let's keep moving forward and see what happens at these pre-established levels. Once again, it comes back. Is it going to break it this time, or is it going to respect it? Looks like it once again respects it. So again, we're not doing anything really fancy here. We're just looking at past highs and lows. And price very often respects these levels. This is why you can very easily build the foundation of a trading system off of the simplest way of looking at support and resistance, just looking at the highs and the lows. So let's go further. Well, this time we broke above that level. And a lot of times I get asked by traders, well, once price has broken a support or resistance, is it invalid? Well, to that I say no. You can leave these on for a good long while, and oftentimes it'll come back to respect it. And I know some people that leave their lines on their chart for forever. I don't know if you need to necessarily do that. But if it's very recent, keep that line there and see if price doesn't respect it for you. So let's see what happens. Well, price didn't quite get to our level. Let's see, if we were to have had an entry level right here, we wouldn't have gotten filled on that order. Oh well, it happens. Just keep looking for another opportunity. Don't worry about it. We at least we know that we're in the ballpark of where price is respecting. We're a lot better off than just looking at a naked chart. So let's go forward and see what happens. Nice little touch of our level right there, that same line that we had on there. Another possible trading opportunity. Right now, we can also say that we are trading within a range. And so if we are looking at analyzing this instrument, in the case of SPY, and we want to know, are we bullish or bearish for, let's say, the longer term? Well, we've established where price needs to go before it is bullish or bearish. For a longer term trade, well, we would definitely need to get it below this level for it to be bearish, and then below this level for it to be super bearish. And if we do go bullish, we know that we're going to have some possible problems when we get up to this resistance. So we know where our exit should be for a long or a short. And that's just by looking at the highs and the lows. So let's see what happens in here in this range. When does it get back up to this level, and what does it do? It definitely wants to get up there. Oh, didn't quite get to it, and we had a fall off. But again, we're still in this channel. We're still in this range. So what's it going to do? Well, we're getting above it here. Now, some people may enter into a short trade here because, again, that is resistance, and that's fine. And if you take a loss, it doesn't matter. But notice what it's doing here. It's not really running away from it, is it? Well, that's kind of a reading the tea leaves sort of way of looking at it. You know, in hindsight, we have the advantage of knowing that, yes, it did come off of it. But these are things that you can pick up on if you start paying attention to them over time. So this takes practice. But I want you to try, as an exercise, drawing up these levels on your charts. You know, you can use the indicators that you typically use. You know, if you're using, say, on RSI, you want to see where it gets overextended at one of these levels. That could be a great confluence of signals to go on. And it's just nice to look back here where, you know, once again, it's breaching below it, but it's respecting this very level that it's been holding for almost a month. And these levels last about that long, especially when you're in a sort of trending sideways, non-trending, but you're in a sideways market. And this is where you can really find good opportunities for trades. So practice this. And if you have any questions, feel free to comment or look me up, and look forward to doing the next segment where we talk about retracement levels and how we can match them with these highs and lows for increased probability. See you later.